Hello everyone, welcome to my channel. This is Emmanuel Odogu right here on this video. Welcome to everyone that is joining me on this new recordings. Okay, for this video we're going to be discussing trend analysis and of course market structure analysis. It's going to be a short one. Okay, now this is still the continuation of my technical analysis which I have done other videos on. So you can just check the channel, you will see other videos. Okay, now please let's talk about the market structure, the way the market moves. Now, the technical analysis is simply volume analysis, price analysis, and of course, open interest. So, why doing technical analysis, you want to consider the volume, right? So, it is this volume that is represented by the body of this candlestick. So, let me zoom in so that you can see. So, it is the volume that is represented by the shape and size of this candlestick. Now from what I have here, I have the red candlestick and of course the blue candlestick. The red is the bearish, that means it indicates the sell volume. I mean traders selling on the market. Okay, then the blue indicate buy volume, traders buying on the market. Okay, now while all of this is happening, the market will face in a particular direction. So trend is a definitive pattern of price movement. I mean price creating a particular pattern and continue to move in that direction. They will call it a trend. Okay, they will say the market is trending. So let's look at this pattern. We're having this pattern just being created, and it is always best to catch it at the very early stage. Now from what we can see here, the price fell, right? The price fell, which we can term as a downward trend, even though it did not last for long. Now please, I am on 15 minutes time frame. 15 minutes is a good time for an intraday trader, even a scalper, to look at trade setup and of course pick profitable trade and make money for yourself. Okay, now but you notice the price came down here, and then from here gradually it has started going up. Right now it moved up from here to this top. Let me use this line to demonstrate so that I can see the structure of the market. So it moved up from this down to this top. It peaked here, right? Okay, let's use this point. It stopped here. Then from here, it moved down. Now, this movement upward, we call it impulse, right? Impulse is a drive in the direction of the potential trend, okay? So it or of the trend. So it push up. Then from there, it retrace. This retracement is it's like resting, okay, to gather more momentum to push up again. So it retraced to this point, then again from there it gather more momentum, it push up, it move higher than the previous high. As you can see, this high, right, high price, I mean, happens to be higher than the previous high. Okay, that is a sign that the momentum or the health of the movement is still very strong. Okay, then from here it retraces again, even though the retracement is a very small one, but usually it retraces to the previous resistance or support. In this case, since it's upward trend, the previous resistance, which will not be a support. So I can put a line here, I can put a line here, somewhere here, as you can see. So around this area, it's where it actually stopped. Then it pushes up again, right? It pushes up again to a new high, okay? Then now it is only doing a mini retracement. So there are two places it can stop. It can retrace to this point. As you can see, I already have a trade there, or it can retrace further to this other level before it can start pushing up again. Okay, so in other words, we are looking at an upward trend. So this is an upward trend. The price is gradually going up. Now this is European euro versus the Japanese yen, as you can see. So if the price is going up, it means it is euro, right, the base currency, that is strong, right, stronger than the Japanese yen, as you can see there. So that is what you do. So once you place a trade, just like I've done, I've entered the trade. The next thing to do is to set your stop loss and your take profit. So I've already set mine. So let me quickly remove it so that I can show you, demonstrate it again, how you can be able to set stop loss and take profit. Okay. Now, after you must have placed the trade, just like I have done, So to set stop loss and take profit, you take your mouse pointer to the entry price there. Let me move this other line too. So you take your mouse pointer to the entry price, that means this green dashed line. Once you're there, you see a two arrowhead pointing up and down. You have to click and drag down, right? So as you're dragging at the far left of the line, you get to see the price or the amount you're willing to risk. This is 2,000 naira now. This is 3,000. This is 4,000. So the best position is to keep it at the recent low. So this is a low here, right? So the price, it will be difficult for the price to come down to that recent low. That is why the best position is at the recent low. So this is a recent low to keep it, right? Or this low or this other low, depending on your risk appetite. So this low is how much? So you can see it's 3,332. This other low is 4,047. This other low is 6,500. So depending on your risk appetite. And for every single trade, you are expected to risk 1% of your capital, right? Or you risk 2% of your capital. You're not expected to risk too much on every single trade, right? That is how you trade. You don't go all in. You trade gradually, okay? So let's say we are risking this amount. This is 3.2. I'll just leave it there. Then this box will appear and I'll click modify. Then the line will remain there. So I have set a stop loss on this trade. The next thing to do is to set a take profit. So my take profit can be the same amount as my stop loss. That makes it 1:1. Remember my stop loss is 3.2. So this is 3.3, right? Or 3.2, right? So this is the same amount as my stop loss. So this is good, or I can extend it further to make it to make more profit than I am risking, which is better. So this is 5.6, and I'll leave it there, and I'll click modify. So with this now, we've been able to look at this market, the way the market has been structured, and we have been able to use it to know the direction the market is going, which obviously from what I've drawn is an upward movement here, right? As you can see. Then from that, we have been able to take a position, take a trade. And after taking a trade, even though it is looking obviously like you're going to make profit from it, but it is best for you to also protect the trade. Every trade is a risk you're taking on the market. So what do? You protect your capital by setting a stop loss level and of course a take profit level. Okay, so just like I said, video is not going to be long, so this is how much we can cover for this. So this is good for those that are still struggling on how to set stop loss and take profit, and on how to analyze the market. As you can see, I use 15 minutes time frame, and this chart is simply a naked chart. Naked chart means that there is no tools, right? So I'm just looking at the structure, right? The structure of the market, the local structure of the market, to be able to understand what the market is trying to do, and of course pick a trade from there. Okay, all right, then, thank you very much. See you on the next one. This is Emmanuel Odogu, and of course this channel is MRX Trade. Catch you on the next one. Bye for now.